lot of attention on housing, and that's because 2020 is shaping up to be a strong year for new and existing home sales. The National Association of Home Builders predicts sales of new homes will hit their highest level in 5 years, while existing home sales will rebound to near the highs from 2017. Robert Dietz is the chief economist at the National Association of Home Builders. He joins us this morning from our D.C. bureau. Good to see you. I am curious about inventories in 2020. Are we going to see a buildup, or are things going to thin out even more than they have been in 2019?
Inventory's absolutely been tight through most of the country. We are expecting some gains in inventory on the new construction side. We expect, after a bit of a flat period here in 2019 for single-family construction, that housing starts will step up in 2020, and that should offer a little bit more inventory, but quite frankly, not enough for what the market needs right now.
To your point, Robert, there are a lot of shortages out there across the country. Are you seeing any particular areas of price bubbles?
Yeah, it's clearly concentrated at the entry level. That's where inventory is the tightest. You kind of think of the below $250,000 area, and that's because it's the hardest part of the market for builders to build to. The combination of the labor shortage that you discussed in the earlier segment, combined with higher regulatory costs and land scarcity, has really made it difficult for builders to build to that entry-level market.
So, Robert, do you think we're going to see more bidding wars in 2020? I mean, you know, if mortgage rates continue to be low, we still have this sort of thin or flat inventory. Are we going to see more people bidding?
Absolutely. 50-year low on unemployment, accelerating wage growth, and then demographics. The fact that more and more millennials are entering their 30s, looking for single-family structures, and there's really not the inventory available for that. I do expect a kind of a re-acceleration of price growth and ongoing bidding wars.
We've seen a big run in the markets this year. Rates are still low. They will probably stay low into 2020. Do you think consumers will be back out there next year taking on more home than they can actually afford?
No, I think the market really has adjusted. People are more realistic about their budgets and what they can afford. I think really where you see the frustrations in the marketplace right now is finding that home that meets the budget and in the location where you want. One of the things that we saw in 2019 was builders having to build more in the exurbs than, say, the inner suburbs where there are favorable commuting locations. And so the challenge for the industry, particularly on the construction side, is to supply homes in those areas where you see population growth and ongoing job growth.
From a demographic standpoint, do you think the millennial is going to be what's pushing the buying in 2020?
Yeah, as a Gen Xer, I hate talking about the millennials all the time, but it's absolutely the case. The fact that the millennials are the largest generational group, they're increasingly moving from rentership to home ownership, and the challenge is just going to be inventory. So the building community is ready to build to that particular markets, but we do need some policy help from communities in terms of efficient zoning rules, enabling more land to be available so that we can continue to build, particularly in that entry-level space.
Robert, I'm an aging millennial. Be nice to us, folks. We're okay. We're good people.
Okay.
All right, we'll talk to you soon. We'll talk to you soon. Happy holidays.
Thank you. You too.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.